Welcome back to the Daily Crypto Roundup, where we break down everything moving the markets and give you the analysis you need to stay ahead. Today is one of those sessions where Bitcoin is holding steady near the 112,000 mark, even as broader sentiment slides into fear territory. Altcoins are lagging behind, Ethereum's struggles are deepening, and we've got fresh reports on whale behavior, institutional demand, and even new filings that could reshape the future of tokenized assets. We'll also look at meme coin action, including Dogecoin's surprising jump, and why some analysts still believe retail culture is enough to bring these coins roaring back. Stick with us, because this episode covers everything from macro shifts to on-chain data to analysts' bold predictions. And it's all going to matter as we head into the next few weeks of trading. Bitcoin is holding firm around $112,100, showing resilience amid broader market jitters. Ethereum sits steady at about $4,295, while XRP is trading near $2.98, posting a strong 4% gain. Solana is popping around $215, and Dogecoin is the standout meme coin, surging roughly 7% to about 24 cents. Cardano trades near 86 cents, Avalanche hovers near $25.40. Toncoin sits at $3.10, and Shiba Inu remains tiny but active at 0.0000129. Each of these coins tells its own story. But the bigger picture right now is dominance. Bitcoin's market dominance has climbed again, as investors rotate out of altcoins and into the relative safety of BTC. Analysts at CryptoQuant noted that while Bitcoin treasuries are still growing, the average buy size from institutions is shrinking, which suggests that appetite is cooling, just as whales are beginning to offload large stacks. In fact, we saw one of the largest whale selling days in over 2 years, with 115,000 Bitcoin, worth about $12.7 billion, moving across the chain. That kind of transfer spooks markets, even if a chunk of it is internal reshuffling between wallets. Ethereum, meanwhile, faces fresh criticism as revenue from its network continues to fall. Some commentators have even gone as far as to call Ethereum a dying asset, though others push back, arguing that while revenues are down, the infrastructure remains robust and the development pipeline is still strong. What's clear is that Ethereum is struggling to hold investor attention, and that's why we see altcoins in general losing ground. CoinSpeaker reported today that the so-called altcoin season may already be over, with capital flowing steadily back into Bitcoin. That rotation explains why Bitcoin is holding strong above 110,000, while so many other coins are stalling or sliding. Dogecoin, on the other hand, gave us a surprise. Up about 7% in the last 24 hours, it's leading the meme coin pack. What's driving it? Renewed retail sentiment, plus the fact that Doge continues to actually be usable in real-world payments. Tesla still accepts Doge for merch, AMC for movie tickets, Newegg for electronics, and travel companies like Travala and Air Baltic for bookings. That gives Doge an edge over other memes that exist purely as speculative bets. Analysts point out that if retail enthusiasm really does return, a coin like Doge, cheap to move, fun to hold, culturally sticky, can rally very quickly. Remember, it went from pennies to 70 cents in 2021 without any of this current utility narrative. Add the utility, and the case for a dollar becomes stronger. Now, beyond the top 10, let's talk about the wider market sentiment. The Fear and Greed Index has slipped back into fear, now sitting at 44. That tells us investors are nervous. They're buying protection, they're moving into stablecoins, and they're waiting for direction. This fear often creates conditions for sharp rallies when sentiment flips, but right now it's a drag on momentum. And in the middle of this, we have institutional commentary. Tom Lee from Fundstrat warned today that institutional flows may actually disrupt Bitcoin's classic 4-year cycle. His argument is that as more institutions treat Bitcoin like an asset class rather than a speculative punt, the old halving-driven narratives might break down. That means traders waiting for a repeat of 2021 could be disappointed, because the rhythm of inflows and outflows is no longer purely retail-driven. It's an important caution. We may be entering an era where Bitcoin cycles are shallower but longer. and where institutions control the tempo. At the same time, regulatory and structural news keeps breaking. Nasdaq has filed for a rule change that would enable tokenized stock markets, potentially creating a direct bridge between traditional equity investors and crypto rails. The US has also quietly launched its own strategic Bitcoin reserve, with an executive order mandating that the Treasury hold BTC as a national asset. Agencies across the government are now required to audit and report their crypto holdings. That's a huge shift in narrative. Bitcoin isn't just something retail traders buy. It's now something governments are stockpiling. Ethereum deserves a closer look here, because the debate over its future is heating up again. Today's headlines zeroed in on the decline in Ethereum's network revenue. At its peak, Ethereum was bringing in billions annually through gas fees, DeFi activity, and NFT transactions. But as of late, revenues have plunged, leaving some analysts calling the network dying. That's a dramatic phrase, and one that gets clicks, but it's not the whole picture. Ethereum is still the most widely used Layer 1 smart contract chain. It's still the bedrock for stable coins, DeFi, and a host of Layer 2s that depend on it. What's happening is less about a collapse and more about a rotation in activity. Gas fees are lower because demand is muted, but that doesn't necessarily mean Ethereum is finished. Instead, it points to a quiet market phase where fewer people are willing to pay premium fees for NFTs or speculative token launches. Developers are still building, but traders have taken their foot off the pedal. Still, this drop in revenue matters for one reason. It dampens the investment case for ETH compared to Bitcoin. Ethereum bulls often argue that Ethereum is a yield-bearing asset, thanks to staking and network revenues. When those revenues shrink, so does the narrative of Ethereum as a kind of internet bond. And that's why Bitcoin is pulling capital away. As CoinSpeaker noted today, altcoin season may already be over, and the money is flowing back into BTC as a safe haven. This rotation is harsh because it leaves projects like Cardano, Avalanche, and even Solana struggling to attract attention. Solana has performed better than most, but the trend is clear. Bitcoin dominance is rising again, and altcoin liquidity is drying up. Analysts like Tom Lee warn that institutional investors are behind this. They're not chasing memes or NFTs, they're allocating to Bitcoin as a macro hedge. That's why the 4-year cycle may not repeat as before. Institutions don't care about halvings. They care about inflation data, rate cuts, and risk management. So while retail waits for fireworks, the smart money is slowly changing the rules of the game. And yet memes refuse to die. Dogecoin's 7% jump proves it. Retail might be quiet, but culture doesn't rest. Doge continues to find use in payments, something most other meme coins can't claim. Tesla accepts it for merch. AMC takes it for movie tickets. Newegg uses it for electronics. Travala and Air Baltic use it for flights and hotels. Thousands of Shopify merchants accept it via BitPay. That puts Dogecoin in a different class than Shiba Inu. It's not just a speculative bet, it's actually spendable. And that means when retail enthusiasm returns, Doge is well positioned to lead. Now let's shift to another headline that shocked the market today. Reports surfaced that Trump-affiliated tokens, ABTC and WLFI, generated over $1.3 billion in wealth for the Trump family after their debut. That's not just a headline. It's a political narrative tied to crypto. These tokens are controversial, but they highlight how quickly political branding can intersect with blockchain markets. Analysts worry that these launches, paired with meme-fueled speculation, could blur the line between serious projects and opportunistic cash grabs. But whether you like it or not, it's another reminder that narrative is everything in this space. Meanwhile, Bitcoin whales made headlines with massive selling. Over 115,000 BTC, worth more than $12 billion, moved across wallets, the biggest such transfer in over 2 years. While some of that movement may be internal, analysts flagged it as a bearish sign. Whales moving coins often spooks retail, even if the coins don't immediately hit exchanges. This kind of on-chain activity keeps traders on edge, because it can either precede a sell-off or just be treasury management. Either way, it feeds into the fear and uncertainty that's gripping altcoins. And sentiment is indeed fragile. The Fear and Greed Index sits at 44, firmly in fear. Analysts at CryptoQuant explained that while treasuries are still stacking Bitcoin, the average buy size is shrinking. That suggests institutions are cautious. They're not panic selling, but they're not going all in either. It's a wait-and-see moment, and those are often the hardest for traders. Markets can grind sideways, exhaust retail, and then suddenly break up or down when the catalyst arrives. Let's talk meme coins, because they are once again making headlines. Dogecoin's jump wasn't isolated. It came alongside renewed chatter about up-and-coming tokens like Layer Brett. Some analysts are touting it as the next meme coin to explode, claiming it could rival Shiba Inu or Bonk. The pitch is simple. It combines meme culture with staking rewards reportedly as high as 800%. Whether those yields are sustainable is another matter, but in a market that loves storytelling, a token with meme branding and utility claims is always going to draw attention. Retail traders looking for the next 100x are watching names like this closely, even if most will flame out. Shiba Inu, for its part, remains quiet, trading flat. But community chatter is still strong, and its developers continue to push into Shibarium, their Layer 2 network. Whether that narrative is enough to spark another rally is debatable, but in crypto, community alone can keep a project alive far longer than fundamentals would suggest. And then there's the darker side of the meme economy. Analysts warn that the collapse of projects like WLFI, already being criticized despite its headline-grabbing debut, could remind investors how dangerous this space can be. Scams, rug pulls, and hype-driven pumps are still rampant, and every new meme coin boom eventually ends with bag holders. That's why Dogecoin stands out. It's survived multiple cycles, it has real-world utility, and it has Elon Musk's implicit backing. Culture plus adoption equals staying power, and that's not something many meme coins can claim. Zooming back out, the regulatory environment is heating up. Nasdaq has filed for a rule change that would allow tokenized stock markets, bridging traditional equity investors directly into crypto rails. If approved, this could dramatically change how institutions engage with blockchain assets. At the same time, the US has formally launched a strategic Bitcoin reserve. Under an executive order, the Treasury now holds Bitcoin as a national asset, and other agencies must audit their digital asset holdings. That's a seismic shift. Bitcoin is now, officially, part of national strategy. It's no longer just a retail hedge, it's a geopolitical tool. Analysts like Tom Lee caution that this institutional and governmental involvement could flatten the boom and bust nature of past cycles. We may not see 1000% pumps and 90% crashes anymore. Instead, Bitcoin may start behaving like a macro asset, more like gold than like a penny stock. For some, that's bullish. For others, it's boring. But for adoption, it's essential. Institutions don't want chaos, they want predictability. So where does all of this leave us at the end of today's roundup? The big picture is clear. Bitcoin is the anchor. It's sitting comfortably in the 112,000 range, holding steady even as whales shuffle billions and sentiment dips into fear. That stability matters. It tells us institutions and long-term holders aren't panicking, even if they're not aggressively buying. The fight for 115,000 is now the key battle line. A breakout above it could open the door for another leg higher, while a failure there likely means more chop and sideways action. Ethereum's situation is more complicated. Revenue is down, narratives are weaker, and traders are rotating out. But the network still underpins DeFi, stablecoins, and countless Layer 2s. That means Ethereum is less dying and more resting. It's not grabbing headlines the way it did in past cycles, but that doesn't mean it disappears. For investors, the question is whether to treat as a long-term infrastructure bet or stick with Bitcoin as the macro hedge. Altcoins as a whole are struggling, and that's not surprising. Liquidity is thin, sentiment is cautious, and institutions simply aren't allocating to the riskier corners of the market right now. This doesn't mean altcoins are gone forever, but it does mean they're in a bear phase relative to Bitcoin dominance. Historically, altcoin seasons return, but they need catalysts, fresh narratives, new tech, or speculative hype. Right now, None of that is convincing enough to pull money away from BTC. Meme coins remain the wild card. Dogecoin proved today that culture plus adoption is a powerful mix. Up 7%, spendable at Tesla, AMC, Newegg, and more, Doge is more than just a meme. It's the people's coin, and if retail enthusiasm comes back, it's the one meme that has a realistic path back to $1. Other memes will pump and dump, but Doge's combination of community and utility gives it staying power. That's why analysts still put it in a different league. That's it for today's Crypto Roundup. If you've made it this far, you know the drill. Hit like, drop a follow, and let me know in the comments what you're watching next. Is it Bitcoin's battle with 115,000? Ethereum's revenue problem? Or Dogecoin's climb back toward $1? This space moves fast, and we're here every day to break it down. Stay sharp, stay focused, and as always, we will see you at the top.